high inflation is currently underway. There is a possibility that the paradigm shift in the economic structure, where high prices are fixed, is underway. The inflation that the world is currently experiencing is ongoing. It will take more time to determine whether this is a temporary phenomenon experienced over a year or two, or if it means the end of a low prices era over the past 30 years. Three factors: recession of globalization, decline in the labor force, and lack of energy can lead to new changes in low prices and high growth. The increase in the consumer price index in August raised these concerns. The US price index came out worse than expected. Concerns of prolonged inflation and continued intensive tightening by the US Central Bank have frozen investor sentiment. Consumer price index rose 8.3% in August, better than market expectations, as announced by the U.S. Department of Labor on September 13th local time. Although the rise in energy prices, such as gasoline, has slowed, the rapid rise in housing costs, such as monthly rent, raised the consumer price index more than expected. The annual CPI growth rate seems to have slowed 8.3% in August, following 9.1% in June and 8.5% in July. However, the annual growth rate of core CPI, excluding food and energy, was 6.3% in August. In June and July, the annual growth rate of the core CPI was 5.9% each, but it was higher than that. The CPI growth exceeded market expectations, raising concerns among investors that inflation would be severe and protracted. As a result, there is growing speculation that the U.S. Central Bank could trigger a more hawkish rate hike. The possibility of a 100 BP rate hike was highlighted at the September Federal Open Market Committee meeting. In particular, the core CPI, which the central bank considers important, rose 0.6% from the previous month, double the increase from July. This suggests the possibility of a significant rate hike amid the prospect that the U.S.'s giant step for 3 consecutive months is conclusive. Japanese investment bank Nomura raised its September base rate hike forecast to 1% P. Concerns over prolonged U.S. inflation and intensive austerity by the U.S. Central Bank, the dollar strengthened and treasury yields soared, leading the decline in tech stocks. The yield on the 2-year U.S. Treasury note, which is sensitive to the benchmark interest rate, broke through 3.75%, a new high this year. The 10-year U.S. Treasury yields, a benchmark for market interest rates, rose from 3.361% the previous day to 3.422% today.